All right, good morning, ladies and gentlemen. Today is January 22nd, 2020, and I'm back with another weekly edition of the Investing Systems Trading Service live show. And today the stock market is hitting yet another all-time high in the history of the world, and just a relentless rally that we've seen here, and we're headed right into the thick of earnings season. So that's going to be kind of interesting. And on that note, I wanted to take a look at S&P 500 to start off with. And I have this trend line drawn on here, and I tinkered around with different ways to draw it. And basically, obviously, the trend is up, right? So I'm going to say if you wanted to give it a lot of sort of wiggle room, I would say connecting those two lows seems like a pretty decent thing to do. Basically, this particular this particular trend really sort of kicked off, and I know I kind of repeating myself week after week, but the trend is intact, and it's always good to review where we came from. So, really started in this area right here. Those couple of days right there. That's when you got this trend line break, and then this is these are the 2 days when phase one of the trade deal with China was announced, right? Trump came out and I think the Dow was up like 300 points that day, right? And then it was a gap up the following day, right? And so anyway, that's when the trade deal with China was announced, phase one, and of course, it got signed up here, right, last week. And then shortly thereafter, in this little window here, that's when the Fed started their not QE of buying $60 billion a month worth of treasuries, in addition to all that repo stuff that they started back in September. And then to sort of cap things off here, the real breakout, right? Like the real breakout came literally right here, and I have it circled because that was the third interest rate cut, right? And so I mean that was kind of an interesting breakout because it kind of broke above these prior two highs a couple of days before the Fed meeting, and then the Fed, as anticipated, announced a quarter point rate cut, which was the third one in a row. I have the other ones circled there. And then, so, you got a couple days where the lows sort of retested this breakout, and then it was off to the races, right? And of course, there was, if you could even call that a dip, that might have been a couple of percent. And I'm not sure I remember what that was even about. But anyway, you can see the trend there. So, if you really wanted to be a stickler for this, you'd probably, not that it matters so much, but you probably want to switch to a candlestick and, connect the lows of the bodies and sort of ignore this day. That day was an outlier. I said last week that I was going to go look and see what exactly sort of caused that weird gap down, and it's just amazing how quickly it reversed. And so that was, I'm sure, some sort of strange news-driven event or whatever. So I never did go look it up. Anyway, so here we are. We've got this trend that's going at like, geez, that might be more than a 45-degree angle. I guess it depends on, the thing about angles is depends on how you zoom your chart, right? If I zoom in enough, then it's a really super aggressive angle. But so theoretically, based on just textbook technical analysis, as long as this trend remains intact, then all is well. However, that's a pretty persistent trend, and it goes all the way back to the beginning of October, right? And it's just incredible. It's been going on for so long, and I'm gonna sort of, I keep getting this idea that just it can't continue at this trajectory for forever, right? Obviously, and so that'll sort of be the first in my opinion, that'll be the first warning sign of an impending uh, correction, I guess. I mean, The thing of it is that if I move this around a little bit, depending on how you draw the trend line, I mean, it gets kind of extended, and then a few times it's sort of come back and retouched it. So a dip right now would take you down to probably touch the trend line. Like we got a dip. Three was a dip, 3-5% or something like that. Pull back 5 to 10%, 10% or more correction. I mean, 10% would, oh boy, that'd be like the end of the world, right? So it's pretty amazing how long and persistent this has gone on, and the angle. And like I said last week, it's sort of incredible. And of course, now everybody's talking about the fed how the Fed's monetary policy is the impetus for this current rally. Interestingly enough, I don't know if you guys caught the Trump interview this morning on CNBC, but Joe Kernan asked Trump directly. He said if he thought there was a correlation between an increase in the Fed's balance sheet and the rally in the stock market, right? Because you guys have seen that chart of the Fed's balance sheet. They've and so anyway, Trump immediately said that, well, the Fed was the problem because they raised interest rates, too quick back in, when they raised them back in like 2018, right? Was that 2018, 20? But, and so he basically avoided the question completely because the balance sheet expansion by the Fed is a completely different thing than, the level of interest rates. So anyway, all that aside, as you recall, the Fed did raise interest rates 9 times in a row, right? And it wasn't really so much the interest rate increases, I think, as when they started reducing the balance sheet. That's what caused the mini bear market that actually lasted half a day, last a year ago Christmas Eve, right? Because from intraday high to low, the market did pull back 20%. So anyway, that was more about balance sheet reduction, I believe, than the interest rate increases. And so it's easy to confuse those, but anyway, so everything's cool long as this trend line's intact. If and when that trend line breaks, then, and who knows what would be the cause of that, right? Because the past couple of days, like yesterday, the market opened weak and was pretty weak in the morning, and then it kind of took a winger because of this coronavirus, right? That's been everyone's been talking about in China, and it's spreading to other countries. And then there was an announcement at some point yesterday that there was a case in the U.S., and immediately the futures sold off on that. So, and then of course, it's basically, it's kind of been shrugged off, although it is, sort of something hanging out there in the background. But quite frankly, stocks move on earnings, and that's that. And the funny thing is that earnings aren't expected to be all that great. So I did bring another chart today that I wanted to show you that I think's kind of cool. And this chart's been floating around too. And here's what's I talk about the market being stretched and this and that. So this is just an incredible chart. Um, so the price to sales ratio. See, the thing about earnings is obviously you got companies that borrowing money to buy back shares, and earnings are managed. We all know this, right? Like, like I can remember for like the past X amount of years, maybe going back 10 years, Microsoft always beats their earnings by a penny, right? I mean, it's a typical quarter, and so I mean, I just think that, well, and everybody knows that earnings can be managed through accounting, but what you can't really manage is your actual revenue. To some degree. I mean, I'm not an accountant or anything, but I think that looking at like the valuation based on revenue is kind of an interesting metric. It's probably one of the most relevant metrics, right? Because actual revenue, sales, is something that that's a good gauge of how's business, right? Everything else is kind of a lesser relevant metric, in my opinion. And so you can see here that the S&P, price based on revenue is Geez, it's above the, it's well above the, I guess that was the 2000 peak there. Yeah. So, and I mean, this goes back a long way. So, anyway, when people talk about the market being overvalued, this would probably be the first chart that I would point to. So, all that aside, let's take a look at the Dow real quick here. Same sort of thing with the Dow, just a relentless rally since the same period of time for the same reasons. And all these problems with Boeing, and Boeing's really sort of that's a 2 year chart. Boeing's like sort of dragging the bottom of its 2 year range, right? And so amazingly enough, whoops, pulled up the wrong chart. Amazingly enough, it's not really affecting the Dow that much. So that's just the nature of the nature of the beast when you price weight an index, and it's incredible to me. It's honestly incredible that the Dow and S&P track so closely when the Dow's price weighted and the S&P's market cap weighted. And so, and of course, Apple. I always want to call it Apple Computer. One of the more amazing charts that you could possibly even look at, just because of, I mean, it started off back here as the most widely held, largest market cap company in the world, and I mean, for the thing to basically double, right? I mean, it's doubled since that January low. Actually, more than doubled at this point. Just absolutely incredible. So, and like I always say, every dollar that gets indexed in the market and flows into 401ks and index funds and all this stuff, it starts with that. It starts with Apple and then trickles down, and so it's just pretty incredible. And it's a whole different. It's being valued. Apple's always been like sort of a value stock or whatever, and it's been kind of revalued. So, you guys that have been around for a long time, do you remember? Um, you remember Jeffrey back last June? Apple had this pretty significant sell off, and we were doing a show, and Jeffrey was talking about how one of his indicators was actually getting a buy in Apple. Let me zoom back to that, and yeah, and this was it. I mean, basically, he was on the show with me, and we were talking about sort of like a recovery play in Apple here on the show, and he had marked a trigger at 180.10. And of course, the next day it capped up like that, and then it just sort of took off or whatever. And of course, he had a trailing stop up here. But anyway, good entry trigger on that, and it's just amazing to me and I mean, Apple has gone on sort of this relentless rally. I mean, just since December, right? Like the other one that I looked at from back here in October. This was the trade deal announcement, right? And so you've got. I mean, this is tricky to even draw a trend line on, but you sort of got a trend line that was at one angle, and that angle of ascent has actually increased, and so that's pretty amazing. Considering that Apple's a $1 trillion company somewhere over here. So anyway, market aside, I wanted to look at, obviously, take a gander at these open trades that we have here, because that's usually what I do on the show here. The market's going to do what the market's going to do, right? And we got some pretty good gains in these open trades, and when we go through the charts, you'll see that the charts are things of beauty. And I'm not going to say that our system's the greatest stock picking system that's ever been invented in the history of the world, but like anything, it's going to be based on, kind of like your 401k performance. It's going to be based on, what the market does. And so, fortunately, the system is designed to obviously take advantage of these up cycles, and You know, and the great thing about it is that, and I've been saying this since the beginning, is that, it's not based on what I think the market's going to do, right? Because I'm always a little bit skeptical. I mean, there's a lot of people out there scratching their heads saying, this is just crazy. Um, what was his name? Paul Tudor Jones was on CNBC yesterday saying that, this market's nuts. It reminds him of 1999 and this and that. But, that's a great thing about sort of having a system and a strategy is that when the market acts crazy or whatever, it doesn't really care, right? Doesn't care one bit. So anyway, we'll take a quick look at these charts here. The first one, Campbell's Soup, just triggered. Just triggered, right? As a matter of fact, it's just triggering here this morning. So, interestingly enough, this is a pretty nice chart. I mean, Campbell's Soup is not really something that it's not really something that you think of as being. Geez, I think I remember not that long ago when, and I don't remember when that was, but at some point it was kind of not all that loved of a company because there was some rumor around that millennials don't eat soup or whatever. But regardless of that, looks like there was a big rally back here in May of last year. Like it took a big leg up and then had a pull back, and so good looking chart right here. Right, it's kind of working its way in sort of a big channel here, and just recently had a nice little sort of pullback, came back up, and so it's triggering in today, and a couple ways to play it as far as getting in here. But one is to be pulling the trigger right around the open here. So the trigger price, we're looking for a close over 48.10 to sort of confirm, right? Because sometimes they'll sell off a little bit, try and back. Here's a good example. Sold off for a couple days, tried to rally up, but you can see this day kind of had a lower close and then came back and touched the bottom of the rail again, and so um, you guys know the drill, how it works. And so anyway, the open today is 48.56. So you're talking 46 cents, call it 50 cents roughly over the trigger price. And so, as I always discuss here, with the target being 49.50, if you decided to go ahead and just jump in like without sweating the small stuff, the 50 cents, then your target would be up here at say $50, right? And I'm about to show you a handful of other open trades where it doesn't matter. It doesn't matter if you get in over the trigger price, right? And I always like to reiterate that the trigger price is basically sort of more of a threshold than thinking of it as your entry price. And so, obviously as I discuss also every week, the system is extremely flexible, and so if you decided that, you really wanted to get in at the trigger price, you could set a limit order and you may or may not get filled on this one. And so if you didn't get filled in the next few days, then maybe, because the stock took off and never came back down here, then you just sit this one out and wait for the next one. No huge big deal. Or, you know, just like it's no big deal to get in when a stock triggers, pay an extra 50 cents on something like Campbell's Soup, big brand name stock, and of course, the initial stop is going to be placed below the pattern, and I would expect that this thing will, either tonight or the next night, this trailing stop or the initial stop will turn into a trailing stop and come back, somewhere probably around the lower end of this channel. So basically what we're looking for here is, we just had a pullback from the top to the bottom of the channel, and so we're looking for a rally back up here towards the top of the channel, and that stop will come up relatively quick. So pretty good looking stock, really. Pretty good look. I actually had somebody email me and say that they jumped the gun a little bit. I guess maybe, maybe got in at the trigger price on one of these days because they like the look of the chart, and that's fine too. That's absolutely viable, right? So, but the system is programmed to work a certain way, and so obviously what you see in the data tables, right, is always going to be based on the data, but it's very flexible. And those of you that have been around a while know that pretty much over the course of time, it's going to sort of even itself out, right? And we kind of designed it to be sort of a low stress, don't sweat the small stuff type of system, and it's been working really well. So anyway, so that's that, and boy, we got some big name stocks here in the open. I guess that's kind of good to have these larger cap, bigger name stocks in the open trades. The way the market's acting here, so the next one is Procter and Gamble, right? P&G, good old P&G. Looks like I have the earnings date. Oh, by the way, Campbell Soups doesn't have earnings imminent, so but P&G does. It's still a long way off. Really nice uptrend, real nice little pullback, triggered in over here. And of course, here's a case where basically the day the stock closed over the trigger, the next day it essentially opened, just right there, right? Expensive stock like this, close enough. So, and now the trailing stop has come up past, basically past, the trigger and what would have been just a buy it at the open the day after it triggered without thinking entry. And so this is kind of a great example of getting the stop to break even in a relatively short amount of time, right? So it's here we are, 1, 2, 3, 4, 5, 6, 7 trading days later, the stop's essentially at break even, so it's a no lose position. And let's see, I don't have the target marked on here, but the target is 127, which, what's that high right there? Huh. That's pretty amazing. Tagged it to the penny, right? Whether you'd have got a fill on this if you put a limit order at 127 is debatable. But because that would have been that was the high tick, that would have been the ask, and so maybe you didn't get a fill, but it's only 75 cents away, and so far so good. P&G looking pretty good, and it's both Campbell Soup and P&G are those stocks that trade, kind of like 2% average ranges. Although this does have some volatility, right? Volatility can kind of come out of the blue, and they do seem sort of like longer ranges. But you zoom out on the chart, and all is well. Back here, looks like we had a trade here, and this is kind of interesting because I can see by looking at the chart. I do remember this. So not quite a year ago, there was a pullback in a trade in this, and it gapped up over the entry, but worked out pretty good. It still hit the target, and it worked out pretty good. I honestly I can't explain why the system didn't trade it here or on this pullback or anything like that, but it's just sort of the nature of the way that it's programmed. But anyway, long story short, P&G, kind of a boring stock, but still, you're still talking from the trigger to the target, just under 3 ATRs, and so keep that in mind. Let's go to the next one. This PODD. Sometimes sometimes I mark up these charts and talk about them, and we really see something on the chart, right? Like as opposed to P&G, just a nice uptrend, pullback, all that. But I mean, this one really had some symmetry to it. So you guys remember, a few weeks back when I would have marked the original sort of setup on here, and 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 drew this trend line and drew that trend line and all that. And so, this is a great example of. There's actually a couple of great examples of how it's supposed to work when it works. And of course, like I said before, I'm not fooling myself that the overall market has been cooperating, but this is just this is kind of a thing of beauty. And the interesting thing about this doesn't look anything like the overall market. This particular stock sort of has a mind of its own, right? So it doesn't have that 45-degree uptrend. But it's got some interesting symmetry. And so basically, nice orderly pullback, trend line break. The biggest issue here was it wasn't really an issue, but the biggest thing that I see on the chart here was that the day that it triggered, it closed what I would call, you know, a little significantly. I won't say significantly, but it had a long range day that closed over the trigger price, right? So the open was $3.50 higher than the trigger, and so there's the and see, this is why I've been marking this lately to get people away from being concerned about not getting in the trigger price. So again, if you paid an extra $3.50 from the trigger price to get in, you just simply add that to the target. And as you can see here, no sweat hitting the secondary target, right? So, and so you got the target in the bag, you got the stop, well above the trigger price or secondary entry, and so everything's looking good here. Now, now we're starting to. This is another one that does not have earnings that are imminent, so we don't have to worry about that. So this can just basically keep going until it stops. It seems to me that the stop is still kind of lagging behind there, but I've seen these things jump fairly significantly, right? Like it wouldn't surprise me to see this stop come up to 184, just guessing, in the next couple of updates, right? Because it's still using like a few days back, um, sort of protecting the lows, because the idea is we want to sort of stay with it. And one thing that you may have noticed if you've been around a while is that the um, the stop tends to, like, the longer that the trade's open, the more aggressively the stop will tighten up. So far so good on PODD. And interestingly enough, before this one hit the pending trades, I'd never even heard of it before. It was not a stock I followed. Here's another fairly widely followed stock, one of the home builders, DR Horton, right? Another great example of how it works when it's supposed to work. It's amazing to me to see these stocks going what I would call, this thing's on the verge of going parabolic, right? So wouldn't surprise me for one thing, this stop, still sort of trailing behind. It wouldn't surprise me to see a parabolic stop kick in on this after the close tonight. I can't guarantee it, but it wouldn't surprise me at all. So same sort of thing here. This is yet another example of the stock triggered, right? This is really sort of a strange one because had the pullback, so the stock triggered this day on January 6th, had a big long range day, and then pulled all the way back to basically like right over the trigger. But the following morning it gapped up, and so the following morning it gapped up and then sold off all day, like right towards the trigger. So even if you bought that gap up and and then the rest of the day you're thinking you made a huge mistake, well, guess what? You didn't. Because if you adjusted the target to compensate for, buying at that big gap up, well, you can see it just blew right through even the secondary target. And I mean, look at it now. So, quite frankly, sometimes, one of the things in the back of my mind that I think of is you don't really have to. The first thing that I think of that you don't have to worry about is how far back this trailing stop is, because I mean the odds of this thing coming down and hitting this trailing stop anytime soon are very remote, right? I mean that would typically happen, if they came out with earnings, and so you guys know that we're going to close this ahead of the earnings. Speaking of which, the earnings on DHI are January 27th before the market opens, right? And so that is January 27th is a Monday. So here's how that works. Before the market opens, and so we're going to close this thing on Friday at the open. So keep that in mind. um, if they were releasing after the bell on the 27th, right? Like if they were releasing after the close, then the stock's going to trade, ahead of earnings, and we would close it that day. But since they're actually releasing before the bell, we want to get out the day before. We want to get out at the open before the announcement. So anyway, long story short, on Friday this one's going to get closed too, and so, like I say, that's why, that's partially one of the reasons you don't have to worry about this trailing stop being way down here, because more than likely, somewhere in between 56 and 58 is where this thing's going to get closed ahead of earnings, in a couple of days, right? So there you go. What I was saying before is that I'm seeing a lot of stocks that when they go into these moves that have lower, or I'm sorry, higher lows for successive days in a row, right? That's where you get like sort of a parabolic move, right? And so anyway, it sort of waffled around, the trigger price here for a while, but once it started breaking out, you got, 1, 2, 3, 4, 5. You're on your sixth day here in a row where the low is higher than the previous day and the high's higher too. Higher highs, higher lows successively. And so, some of these stocks are kind of going parabolic. So it's a perfect time to peel this one off, right? Still a beautiful chart. I mean, it don't get much better than that. Just a thing of beauty. But, here you are just ripping the new all-time highs, or not, I shouldn't say all-time highs, like ripping the new highs ahead of earnings in sort of a parabolic fashion. Um, it's a good time to be closing this ahead of earnings. Put it that way. Now, check this out. So here's one same sort of thing here. This one's released earnings this morning, and so we're closing this thing out. And it was the same sort of thing. Now it didn't have this one particular day here. It didn't have a higher high, but it did have a higher low. And so yeah, 1, 2, 3, 4, 5, 6, 7, 8 days in a row where you have a higher low. And you can see on the chart that basically it's sort of just gone parabolic here too. So be a good time to it's a good time to close this sucker for earnings. So I'll mark that right on. Well, I guess I could put a vertical line right there. So closing this one out, and same sort of thing. It spent the first couple of days. This one actually, when it triggered, it triggered. Let's see, this day, and essentially opened right around the trigger price, and then had a couple of crazy days, right? So the official trigger would have been right there. So that opened 88.86, right? So it was right there. And then the following day, big gap up or whatever and sold off. And so anyway, kind of the point of looking at some of these and like doing the review of them is a lot of fun, because what you get from the review is that after you've seen enough of them, you realize that, a lot of what happens right after it triggers doesn't really matter in the bigger scheme of things. I mean, it doesn't matter. And like these days with all this volatility in that, there's no reason to sweat it, because And here's the thing, occasionally, right now we got, two, four, so we got seven open trades, and there was one that, triggered in and then boom, hit a full stop out recently. And I guess this month, and it was like 4%, right? Like a 4% stop out, boom, right off the bat. But that's not a big deal, obviously, and it's been kind of rare. It's actually been very rare to take a full stop out right off the bat. Typically, the stop, like, will trail up at least once, maybe twice, and then some of them hit the stop. But, in the bigger scheme of things, I guess my point is like, when you get into one of these things, even if it does something crazy for, the first week, you don't necessarily, want to overthink it or worry about it or whatever. I mean, your position size should be small enough that you're not all that concerned about sweating the small stuff because you can see what happens when they work out. And so this is it's just another example of a stock that's kind of gone parabolic here, and this is a nice one to be locking in right here. So it is what it is. It's a great and the other thing is it's a REIT, which is kind of unusual for, well, Prologis is a huge, massive, well-known REIT, but with a parabolic move like this, it's a good time to be locking it in. And so the earnings season is kind of a cleansing, right? So like I just showed you, DR Horton's going to get closed for earnings in a couple of days. This one's getting closed for earnings today. And so it's kind of a nice sort of cleansing of the open trades, locking in the gains. And obviously, if like say you were really keen, you did some research and you looked at this, you got a really good price, and you're keen on like that big fat dividend this thing pays. In theory, if you had a big enough position size, you could hang on to a little bit. You got a great cost basis, and obviously, like whatever happened here, that could have been the last earnings release. I don't know. Or, I mean, that could, with a stock like this, that could have been a combination of, it could have been an earnings release or it could have been a dividend payment. Because when a REIT gives you a dividend payment, it comes out of the share price. And so you just never know. I mean, that's why it pays the sort of, if you were going to treat this as an investment where you got a really good entry price, then it would pay to know like sort of all the details. So I haven't really done the research on this, but again, when a REIT goes sort of parabolic like this, probably not a bad idea to lock most of it in. So moving on, let's go to Stag. It's another REIT. Quite frankly, the past couple of weeks when I've been talking about these, because these have been open for a little while, I didn't really notice that this was also a real estate investment trust. So I guess it's been a pretty hot sector, right? So this thing's been open for a while, right? This is the second longest one that we've had. So it triggered on back here on 12/20 this day right here, and pretty respectable move here, right? Same sort of thing. Spend a little time hovering around the trigger price. You can see how the stop kind of trailed up really sort of nicely just under some previous lows, and the current stop's under this long range bar that actually hit the target, and you can see it plowed through the target. And if I marked a secondary target on there, it would have easily attained that yesterday. And now it's looking a little bit it's looking a little questionable here, but earnings are they're not till February, like not till 2/12. So earnings not imminent here. I would I would expect this stop to probably come up significantly in the next day or so. Oh, something I forgot to mention on the PLD here is parabolic stop kicked in, right? And so I can't fully explain like why and when the parabolic stop kicks in, like when the system detects the stock's making a parabolic move and to protect it. It's not really going to matter on this one because It's not going to matter because this one's closed for earnings now, basically. And so, but the thing of it is that some of those other ones, where I was talking about the lower highs and all that, they seem like, it wouldn't surprise me to see parabolic stops kick in on some of these other ones any day now after the up there. I should say any night, but it's a matter of the calculations, right? And so, how extended, how parabolic is it? This one, to me, kind of looks parabolic, but it's nothing like the prior one. And so last but not least, DXCM. DXCM is sort of an interesting one because this has been open the longest, right? Expensive stock, right? Healthcare, medical instruments, but triggered back over here, opened right at the trigger, so there was no gap up or anything like that. But the crazy thing is, it went sideways for 2 weeks. I mean, just completely sideways in a narrow range for 2 weeks. Then once it started heading up, went through the target, which doesn't look all that. I mean, the target doesn't look all that impressive, but the targets are consistent, just under 3 ATRs, right? So, and then what's more interesting, and I talked about this. I guess this would last week I would have talked about this. How that trailing stop kind of ratcheted up, and then and then ended up like right hovering right under this long range day, like it had moved from back over here to right under that day, which kind of makes sense. And when I was looking at this, doing this update, this is the current stop here, 227. I was looking at this thinking, okay, boy, that's really tight now, right? And that's what I was talking about earlier when I said that the trailing stop has a tendency to tighten more aggressively as time goes on, right? And the price hadn't gone ballistic. As a matter of fact, it ran up here and then it started to kind of pull back and consolidate, but the trailing stop got really aggressive there. And then and of course well above the trigger, no big deal. And so that's what you want to see. But so look at it today. Um, Big up day. I mean, this thing, is up $7.50 today, three and a quarter percent, and all of a sudden that trailing stop that looks like it could have easily got tagged this morning, right? Stock's $12 above that now, and so beautiful, right? Beautiful. So there you have it. There's all the open trades. We just went through the charts, and I got some pretty decent gains here. And of course, locking in this one, and then another one's going to get locked in. So all is well. And of course, the two big brand name big cap stocks that have like this one just triggering in. I mean, it's hardly had a chance to do anything. So the ones that have been open the longest, these three at the bottom here are they're still open from December. And so there you go. The crazy thing here is that there's only one pending trade, right? And so basically what's happened is, some of the ones that were pending dropped out and a couple of them triggered in. And so here you go. There's Wendy's. Oh, look at that. Wendy's going to trigger is Wendy's is going to trigger today. Well, I shouldn't say that because it's still early, but um, Wendy's trigger price 21.75, right? That's pretty interesting because you guys remember it was it last week I was looking at this and I marked that, right? Marked that and we talked about it a little bit. I drew this trend line. And I'm not sure why I eliminated that particular day, but anyway, so we had a trade over here, but the stock ran up, pulled back, nice little sort of reversal, and so unless this thing fades back down or whatever, so Wendy's going to trigger in today for like the third time in a row. That's sort of interesting too. Some of these things I want to check something real quick. So let me give you just real quick. Let me give you a scenario that I just want to give you a quick scenario. Okay, I had to check earnings on this. Okay, and the reason being is that suppose that suppose that Wendy's was on the pending list and it was triggering in like this, right? And then they were releasing earnings like Friday morning. We would basically we'd basically take it off the list, right? So we're not gonna, and so that would be like maybe the only anomaly that you might see occasionally, and that's only going to be during earnings season. And we don't have an automated way to do that, right? I don't really have an automated the system I should say doesn't have an automated way to check for earnings, in the next couple of days on a pending trade that may trigger. And so the idea would be is that, and see, here's the thing is like you don't really have to worry about that because um on the open, or I'm sorry, what am I looking at here? Yeah, on the pending trades thing, you'll see that the triggered today means that it's a buy. It's a buy at the open the day that it's on this list, right? So Campbell's is triggering in today. So, on the outside chance that there was an anomaly like Wendy's triggered, but they were coming out with earnings in the next day or two, there'd be no reason to like trigger in and then have to close it for earnings, so we would just eliminate it. It would never show up on the triggered today table, and so you don't have to worry about all those details because we take care of them. Anyhow, so far so good. Feeling pretty good about how the system's been doing here recently. And I'm feeling pretty good about, these open trades and a couple of them getting closed ahead of earnings. What I'm not feeling good about is, the sustainability of this rally in the market. And so, it's actually probably a good thing that we're sort of lightening up here for earnings season, locking in some gains. Literally, the stops on I'm pretty sure that the stop on just about every single one of those that's been open for more than a couple of days, the trailing stop is already above the entry price, right? And so we're just kind of coasting along here as long as the market sort of stays crazy, right? And I do have a feeling that we'll start to see some more stocks hit the pending trades list, but the software is sort of programmed to work over cycles, right? And so you get a pullback cycle in the market like this, you're going to get a bunch of stocks, that start to add up on the pending list, and then you get a little short-term up cycle, and a bunch of them trigger in. And you ride them up, and then you get a sell off like this, and you get some that hit the trailing stops and all that, but it sets you up for another up cycle. And so same thing here. We had a bunch of stocks triggering in when the market started rallying here, and then somehow or other individual stocks had their own little pullbacks as we've seen on the charts because they don't always follow the market. And so we've had a decent, reasonable amount of stocks that have triggered in recently, right? I mean, there's 7 since mid-December, but you don't want to get all crazy aggressive right here because it just seems like, And of course, we all know we've been around a while, know that the market can stay irrational longer than you can stay sane, right? And so, but here's the thing: is that when I look at this, I know that it's gonna something is gonna, and who knows? I mean, this thing it's kind of going parabolic here, but it could continue and continue. We could barely have a pullback. And what year was it? Like 20? It was like 2017, was it? I think it was, yeah, 2017. You had the whole year. Here's a weekly chart. The whole year literally did not have a 3% pullback. Right? I mean, it didn't. I remember it really well. And so you thought the trend was kind of crazy and persistent here, and then And then lo and behold, you sort of went parabolic here. And then things got nuts. And then, of course, in January, at the end of January in 2018, boom, you got a 10% correction just right out of the blue. So, and so, here we're on the same sort of thing here, kind of going parabolic, really a long duration, very persistent rally. Look, I mean, the weekly RSI, right? I mean, this was like just, you know, chin dropping on the desk. RSI of 90 on the weekly chart. And so, here we are to RSI of 80 on the weekly chart. Of course, the week's not over, but I mean, that's pretty stretched, right? There's one thing, well, I didn't even look at the daily RSI, but 75, right? So the market can stay overbought, and the RSI, as we've seen, can get to like just insane levels. And so the thing about it is you just like, you don't have to like it, or it doesn't have to make sense, as long as you're just sort of going with the flow or whatever. Um, that's a ticket there. And so the great thing about it is, no matter what the market does, no matter how overbought or how crazy it gets or whatever, the way that our system trails those stops up, we know that it's going to work out for us, right? So I mean, that's really the only way that you can sort of, protect your gains in in a parabolic run up, is to just keep raising the stop, raising the stop, raising the stop, and of course we're not taking the risk of holding these things over earnings, and so that prevents a 7% gain from turning into a 7% loss, because you held it over earnings and the stock gap down. So anyway, so that's that, and everything seems to be going great. Everything's on autopilot, and I think that I think it's working the way that we designed it to. And so I want to thank you for coming to the show again on Wednesday, and have a good rest of the week and weekend, and I will see you back here next week.